Now, onto another trade story. For 18 months now, Ethiopia has been exporting goods into the United States without the tariff and the quota benefits that tend to come along with AGOA, the African Growth and Opportunity Act. Despite that, though, exports to the U.S. actually grew in 2022. Compared to a year earlier, Ethiopia exported goods worth nearly $717 million, nearly 20% more compared to 2021. That said, the trend flips in 2023. Just $180.1 million worth of goods exported in the first 5 months of the year. That's roughly 40% less than the same period a year earlier. Now, we love a good puzzle here on the program, so here's a question confronting us today. Is the dip that we're seeing now mostly a result of the AGOA cutoff kicking in, or is a more plausible explanation perhaps that American households are just spending a lot less in a period where inflation is at levels they haven't seen in decades? I put that question to the global chairman of the Fairfax Africa Fund, Zemedene Nagatu, some hours ago.
Even when Ethiopia was still participating in the AGOA privileges, the amount of export to the United States were relatively small. What we were actually focused on was the potential of AGOA over the next coming years. Because remember, Ethiopia's industrialization started in earnest only a few years ago, maybe 5-6 years ago. And it was about to start to take off when obviously COVID hit, but also when AGOA. So I wouldn't want to put, and I haven't seen all the minute details of what the composition of that trade, as you said, decline figure might be, but I can't imagine all that being because of AGOA. As you know, last year and coming into 2023, globally, there was concern about a global economic slowdown. It's only now in the last 3-4 weeks we started getting clarity that it was going to be a soft landing globally than a recession. So maybe purchasers were cutting back. And also in the previous year, when I look at some of the export figures of Ethiopia, for example, coffee last year was record in 2022, partly because of obviously significant increases in Ethiopian production, but also the drought in Brazil, which is a major producer of coffee, helped contribute to countries like Ethiopia to export. That is obviously not every year sustainable type of growth.
I remember one of the main concerns that we had when we had this discussion at the end of 2021 was, if you essentially take these tariff and quota privileges off the table, that might then translate into job losses. It might make some companies wary about investing in Ethiopia. Did any of those concerns around job losses or the diversion of FDI come to pass?
The diversion of FDI has not. I mean, and I'll give you very solid figures. This year, again, if you look at the UNCTAD annual FDI ranking for Africa, Ethiopia was still in the top 5. It was in top 5 last year, top 5 the year before. The last 5 years, it's been in the top 5. So actually, when you look at the aggregate of FDI that it came to Ethiopia the last 5 years, it's been in the top 10. It might be number 3 this year, 2 last year or so on, but it's been steady. Part of the reason is, and this is very interesting, and especially for you viewers, a lot of the investment that comes, the FDI investment that has come in the past several years to Ethiopia came from places like China, not from the United States, not from Europe. Yes, there is some European FDI, and there's a little bit of American FDI, but by and large, it came from emerging economies. Now, with regards to, did it have an impact? Did the sanction, well, let's put it this way, excluding Ethiopia from AGOA, did it have an impact? To a certain extent. We all made a lot of noise about it in Washington, in Ethiopia, everywhere, because it was disproportionately affecting working women. Because a lot of the AGOA benefits in the case of Ethiopia was for manufacturing, clothing manufacturing, shoe manufacturing, those kinds of stuff that is produced here, which would do benefit from 30 to 35, 40% in some cases, tariff benefits in the United States. So our concern has always been, why put sanctions or why affect working women, mostly mothers, when you put sanctions like that? So that was our main concern. The impact has been, I'll be very frank, it's been less than what we thought.
Okay, so that leads me to my last question, and this I guess is slightly more on the philosophical side of things. But if you're advising the Prime Minister now, right, with everything that has happened in the last 15, 18 months, wouldn't the sensible thing to do to simply say, listen, okay, let's just plan for future without a go. Let's make Ethiopian industries a lot more competitive to a level where they can essentially compete on price with producers in Bangladesh without needing special treatment to get access to the American market?
Excellent point. And this is something actually not just Ethiopia, but every other African country has to focus on, is whether we have a go or not, we need to increase our productivity, our quality production, whether we have a go. Let me give you a real life example. I'm the chairman, as I've mentioned to you in the past, the chairman of a big multinational clothing manufacturer retailer. Okay? We have a factory in Ethiopia. Today, our productivity, our factory's productivity in Ethiopia is 90 to 95% of our European factories. And we've only been in Ethiopia 5 years, 4.5 years. Okay? So that's exactly the point you made. So whether I have a go or not, with those kinds of productivity, and the counterpart to that will be my labor cost is a fraction of what we pay in Europe for the same thing, to manufacture, leggings, to manufacture T-shirts. I am on the shelf, first class product, equal. In fact, the price tag is attached to the product here in Ethiopia. It just lands on the shelf in Europe. Okay? And yet, my productivity is 90 to 95% of my European factories. So that's a good point you raised.